Hey everybody, we're going to talk about industrial real estate today, and specifically the leader in industrial real estate, and that is Prologis. Ticker symbol is PLD. Before we jump in, please take a minute, click subscribe to my channel, and please take a look at the message you see on your screen for a message from our sponsor, The Motley Fool. You get the top 10 stocks to buy right now, and it's a great way to support this work Tyler and I are doing. So, we are going to be talking about Prologis. It was a pretty solid performer in 2023. Industrial real estate, if you're not familiar, has been on fire over the past, say, 3 years. The pandemic definitely pulled forward a lot of growth in e-commerce, and e-commerce requires a lot of space in industrial properties to fulfill orders, store, inventory and things like that. So the stock actually underperformed the S&P 500 last year. It didn't do poorly. It produced a 22% total return versus about 26% for the S&P, so pretty solid performance. It beat the real estate sector, for context there. And a lot of institutional investors are kind of pessimistic on the industrial real estate space. Um, from JP Morgan's recent real estate outlook report, they say industrial real estate may be starting to cool down. It is a good idea for these companies to optimize cash right now so they have money to capitalize on opportunities in the market because they foresee a little bit of pain. But on the other hand, Moody's is projecting 5 to 6% annual revenue growth or annual rent growth for industrial real estate for the next decade. So let's try to reconcile that a little bit. And we have to also point out that not every company is Prologis, right? There are a lot of smaller owners that are not nearly as financially strong, is not nearly as efficient, don't have the scale, etc. So Tyler, we'll start with you, and you pitched this. You pitched the title to me as "Can Prologis repeat its success in 2024?" So my question to you is, can they?
I, Separating the business from the stock, I think absolutely. One of the things that we have talked about for a really long time is kind of like the embedded growth in Prologis's business, because as you know, when you rent out an industrial space, you typically do it on 5 to 7 year rental contracts, and then after that 7 years or so, when you re-rent it, the rates tend to go up, have been, at least in recent years, gone up a lot. We're talking, rental rates increasing 20, 30, 40% annually when these new ratings happen. And because of that, and because of all those built up leases that have yet to expire in Prologis's business, there's a lot of embedded growth. Just like all it needs to do is bring its current leases up to market rate. In its most recent investor presentation, it gave a pretty good idea of what we mean by this. Because of these, embedded rent growth, since 2018, management estimates that it's realized about 1.7 billion of net operating income growth from that embedded lease, change in lease rates for its facilities. And all the way out into 2026, there's another $2.4 billion in potential net operating income just from leasing at current rates. Meaning, like, if from today until 2026, we see zero rent growth in the United States, or I guess you could say across its entire portfolio, because it is Prologis, it is global. If it saw zero rent growth, it would still realize $2.4 billion more in net operating income. So that's pretty impressive. And four to the estimate that you gave, the going out to 2030, I think you said 4 to 6%. That's really in line with what Prologis has been saying. They're saying, like, out to 2026, they're estimating somewhere between 4 to 6% as well, which all in all is pretty modest. They're not looking for, I guess you could say, pie in the sky sort of projections. They're like, yeah, we think vacancy rates are going to be about 6%, 4 to 6% growth. That's not normally the pitch that you get from, like, management teams. They tend to be a little bit rosier. And so if you look at that, and at the same time you look at the scale of Prologis, not only can it invest in America, but it can invest in a lot of other places. I know in previous videos that you and I have done, I've spoken quite well about the Mexico market and kind of the economic development that it's going there. Prologis does estimate that the rates of return for investments in Mexico are about double what they can get in the United States today. I think they say it's about 6 to 7% for a facility in the United States, and it's close to 12% in Mexico. So there are places that it can go to get growth that isn't necessarily in America, and that could be very beneficial over the coming years, especially because in other markets you can get cheaper debt. You know, euro denominated debt is considerably cheaper than US dollar denominated debt these days, or the interest rates you can get on those. And so things like that, little things at the margins that only Prologis, because of their size and scale, can do. There's not a lot of local and regional industrial REITs that can be like, oh yeah, I'll just take out debt in euros and then go invest in Mexico. It's just not possible. And it's one of the ways that Prologis, I can't speak to the stock because that's very much a narrative driven and sort of thing over 2024. But certainly from a business side, those are the sort of things that I think are going to make it be able to have another fantastic year, at least from financially what it did in 2023.
Yeah, so just a couple of things to add on to that. Tyler, you had mentioned that we're seeing recent rent growth in the 20, 30, 40% range. You actually lowballed that. Prologis reported 54.2% cash rent growth in the third quarter. So it is, releasing spreads are tremendous right now. Right. And the average Prologis lease is around 6 years. He said 5 to 7, so that was spot on. So many tenants are on pre-pandemic leases before all this growth and rent growth was pulled forward. So while we can't speak to the stock, I have no idea what the stock's going to do over the next year or so. The current valuation looks expensive. Prologis currently trades at about 23 times its core FFO, which is expensive for a REIT. But that doesn't take into account all that embedded rent growth that's in there. So the real number, if you count what it's going to be making once all those leases expire, would probably be in the teens somewhere. Beyond that, and I'm sure you would agree with me here, Prologis is just killing it. Their business is doing fantastic. Just to kind of compare it to the rest of the industry, the historical average vacancy rate for industrial properties is a little under 8%. Right now, the overall industry vacancy rate is about 5%, 4.9 to be exact, and that is up 70 basis points from the beginning of 2022, or 2023 rather. So Prologis' vacancy rate is less than 3%. Their properties are fuller than the competition. They've been doing a better job of growing rent. The 20 to 30, 40% range of rent leasing spreads, that's accurate for pretty much every other industrial REIT. Prologis is just, above the rest. So it's a rock solid business. They're actually the biggest REIT in the world right now by market cap, and they have 1.2 billion rentable square feet of space. They're definitely one of the biggest by sheer property size. So I'm really excited to see what this stock does in 2024 and beyond. I think, like I said, I don't know what the stock's going to do, but I think the business is going to surprise a lot of people over the next few years. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.